Welcome to Volatility 411. I'm Joe Tigay. The VIX is at 1420 right now as I'm recording this video. The S&P 500's down by 0.5%. The VIX, of course, is higher, modestly higher. 1420 is a low reading for the VIX. The market's kind of trying to figure it out. Same as interest rates. We got some stronger than expected economic data this morning. ISM came in hot. Inflationary pressures are still there. The Fed, 2 weeks ago, it seems like a long time longer than that. They were just trying to tell us we might raise rates before we cut rates. Rates are going to stay higher for longer. Maybe the market shrugged it off at the end of August, but right now the market's trying to say, trying to price that back in a hurry as we're starting to see this strong economic data, this inflationary data potentially out there. So the market's pricing that in, and not surprisingly, the worst sectors of the day are the risky sectors. The Nasdaq's down more than the S&P 500. The best sector of the day, of course, would be value stocks, and the risk less sectors, utilities, healthcares of the world. And that's not to be surprised. Now, I would expect a volatility to be on the move if we were seeing everything down the same amount. That would signal a credit event. We're nowhere near that right now. We're just trying to reprice inflation, reprice these interest rates, and get things in line. For the month, remember, September is seasonally the worst month of the year. A lot of people forget, though. They know September is the worst month of the year. They forget the last week of September happens to be the worst week of the month. Keep that in mind when you're looking at options expiration. That'll be after the third Friday of the month, of course. That's when most things expire. Also, the VIX expirations happens to be on a big day. It's on a Fed meeting, so the October VIX future, a lot of people will be putting bets on in there. For Equity Armor Investments, I'm Joe Tigay.